Bloomberg Audio Studios. Podcasts, radio, news.
The single best idea. Here's the single best idea. It was Super Bowl 60. It was not Bloomberg Surveillance day after Super Bowl 60, but we've been doing this for a few years. Today's show was the strongest post-Super Bowl show we've ever had, and it was so because of always our guests and always the news flow. A huge economic week ahead. What a joy to have the Vice Chairman of the Federal Reserve, the former Vice Chairman, I should say, for Chairman Powell, Richard Clarida of Columbia, Richard Clarida now of PIMCO. Brilliant question. Paul Sweeney asked Vice Chairman Clarida about 1951 and Fed independence.
This is what they call in D.C. very big tent language. It means different things to different people. The one accord that we do know about, which is the one that was struck in 1951 between the Treasury and the Fed, was a signal moment in Fed independence because it got the Fed out of the business of essentially capping Treasury yields. In fact, as I like to teach my students, we all know that World War II ended in 1945, but the Fed didn't get the memo until 1951 because the Truman administration pressured the Fed to keep a cap on rates. The Fed declared independence in the accord. I think now if there is a Treasury-Fed accord, it would not be so much focused on that. It would be focused on, for example, should the Fed hold $2 trillion of mortgage-backed securities? Should the composition of the Fed's portfolio really be tilted toward T-bills and less from holding 10 and 30-year treasuries? So I think there are a lot of conversations to have.
Richard Clarida there of PIMCO. So yesterday we're in the game, and I'm drifting off because it was, it was such an offensive soiree. Sort of like not boring, but it's great defense and all. But I'm thinking about tech. And my question was, okay, there's a bond offering last week. There's got to be another one sometime soon. And after that, another one. Well, like 6 hours later, we get this deal from Alphabet, Google, including 32 and 100-year bonds. Bloomberg wrote it up brilliantly in London. The 100-year bond is in sterling. It's going to be fascinating. We dragged in Robert Schiffman, expert on tech credit. Robert Schiffman on these bond deals by hyperscalers.
I actually think this is pure genius. Weighted average cost of debt capital is near zero. You've got some of the smartest, wealthiest businessmen in the country making a long-term bet on AI. They don't care about what the stock is doing tomorrow. They know that their balance sheets are pristine, and they are building for long-term success. So I think people always asked us, why are these balance sheets AA and AAA? They've got so much cash. Why don't they buy back more stock? Why don't they give up bigger dividends? It's because they have vision, and this is some of the vision. You want to be able to put capital to work whenever you want, in whatever size you want, and they're doing it now. And quite frankly, I think it's genius.
Can't say enough about his work. Robert Schiffman on the terminal, on the Bloomberg. You have to have a Bloomberg terminal, but writing up on tech and credit, he is just absolutely definitive. We're on a podcast. We're on Apple with all that they did at the Super Bowl. We're on Spotify, on YouTube podcasts. Single best idea.